the most important thing that people forget about when they talk about the prices of houses and how much they've inflated. They're not comparing apples to apples. Our typical house is no longer the same size as it was in 1960, 1970. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and I'm going to talk about home values and what's going on in the housing market. And I've seen a lot of people upset about house prices, and they're always comparing, grandma's house or their parents' house and what they could afford then versus what people could afford now. And I don't want to downplay and say, well, it's not a big deal that people should be able to afford houses. They simply can't. And that is actually a problem. I think a healthy housing market is very good for the overall economy. I think it's actually good for what I do as a multifamily real estate investor. I think a healthy housing market is definitely good. But it is the facts that a lot of people can't afford to buy a house. Now, short term, certainly that helps me as a apartment owner because people are stuck renting for longer. But I think long term, overall, a healthy housing market, both on the buy and on the rent, is a good thing. So let's go through some facts and figures. First of all, I looked up, and this is just a quick search. So go ahead and fact check me. I'm sure some of these figures are going to be not 100% accurate, but you get a point of kind of what's happening here. So I looked back to 1970. The median house price in 1970 was only $23,400. Now, that's important to know. $23,400. It sounds like, oh my gosh, that's so amazing. It's crazy how low that was. But if you actually look at inflation and think about what the inflation was, 1970 equals about a $200,000 home when we factor in inflation. So a house back in 1970 that you were going to buy was $200,000. Now you might say, well, geez, the median income, the median home price today is much higher than that. And that's true. The median home price today is actually $416,900. And that's in US figure. Okay. The average is actually $503,800. So that's quite a bit up, but actually it is down. It's down $9,900 from Q1 of 2024. This figure, the $416,900, that is a Q1 2025 figure. So prices are obviously always changing a little bit. We look at 1970, okay, 23,400. Then in 1980, 63,700. So it nearly tripled in 10 years. That's definitely much higher than inflation. Inflation is typically about 2% a year, 2, maybe 3, but typically averages about 2. Now, 1970 to 1980, we did have a heightened amount of inflation. 1990, it went up to 123,900. So 123,900, basically doubled from 1980, 63,700. A little bit slower, and that makes sense because inflation was a little bit slower. Still beating out inflation, though. From 1990 to 2000, we didn't actually see much increase. So from 1990, we had 123,900. And in 2000, it was only 165,300. We had a big skyrocket that happened from 2000 to 2006, right? Where prices drastically increased. I should have looked it up, but I don't know that number. But the median house price in 2006 was way higher than it was in 2000. I would guess it would be the mid 200s, maybe call it 250. 2010, prices were down a little bit from 2006. So the median home price in 2010 was 122,900. So we haven't even doubled, by the way, yet. From 1990 to 2010, home prices have not doubled, going from 124,000 to just $222,900. So we saw some really slow growth from 1990 to 2010. Now, granted, there was a big run up from 2000 to 2006, but then there was the Great Recession, which really knocked prices back down to earth. Prices kind of flatlined from 2010 to about 2013, but then they started to go back up. And in 2013, they started really to go back up in a nice clip. And they went up through 2022. They went up all the way to $329,000. So still a good increase, but nothing crazy. Here's where it really happened. So from 2020 to 2022, just a 2-year time frame, prices went up by 46%. That's the most in history. And that is what caused massive affordability issues, because then in 2022 and end of 2022 into 2023, actually 2023, really, interest rates went from all-time lows. People were getting these interest rates locked in for 3%. They went from all-time lows of that 3% all the way up into the sevens. And now we have seen prices continue to climb all the way up to $416,900 on a median house price. However, we have not seen prices fall. We just saw last year prices fall for the first time, but not much, right? $9,000 or almost $10,000, but not much. And so we have an extraordinarily expensive mortgage happening right now. And that is really putting pressure on people. So in 2020, the $329,000, price was actually pretty affordable when you were considering what you were paying for your mortgage rate. But the fallout of COVID, as we found, and the reaction to COVID caused major negative effects. Obviously, massive inflation happened, all kinds of negative effects to it. But when we look at housing, 46% increase from 2020 to 2022. That is just absolutely crazy. And from 2022 to 2025 today, we have seen an increase, but not much. And so we had that 2-year just explosion of price values, and that's what's really happening. But now let's break this down, okay? Because people are like, man, you're just reminding me how expensive houses are. But here's the difference, though. There's some big differences. When I look at 1970, the house prices in 1970 were definitely low, $200,000 inflation adjusted. However, interest rates at that time were extremely high. We're talking 15%, depends on the year, but in the 1970s and early 80s, interest rates were very high, double-digit interest rates. So that's one thing, right? And we have to look at how much our house payment was. Here's another big difference is back in the 1970s and 1980s, the typical household had to put in a 20% down payment. So when you look at the monthly payments that people had to make in 1970, this is really what's important. Okay. When you look at the down payment and the monthly payments that somebody had to make in 1970 versus what they had to make today, we don't see nearly as much of a price increase. And now we're starting to with interest rates going up. But what we saw is people had to put these big down payments in. So what does that do? That definitely doesn't help prices inflate as quickly because we have to save for a big down payment. Now, what happened? Well, FHA and all these other loan programs came about in the 2000s, and especially post Great Recession. Now you can get into a house very easily for 5% or less down. And so if I can get into a house for 5% less down, I don't have to put much money out of my pocket. That's like 1970s money that I got to put out of my pocket, 1980s money maybe. there's zero inflation there of my down payment. So I used to have to put 20% down. Now I have to put 3 to 5% down. And now I can get this mortgage in this new house for that. So that's a huge difference when I look at things. My down payment in real dollars in 1980 was going to be about $15,000. Okay. My down payment in 2025 is going to be about $15,000. Okay. Maybe you have to go a little bit higher and maybe end up being $25,000. But when we look at inflation adjusted, essentially we are putting way less money down, way less money down than we were in 1980 on our house. Okay. The other thing is, especially when you look at the big run up in 2020 to 2022, interest rates were 3%. And so my mortgage payment, my actual mortgage payment per month was much more affordable in real dollars, inflation adjusted, than it was in 1980, especially when we were in early 80s when we were getting mortgages and they were 10, 12% or greater. And so we're looking at, man, we had to in 2022, as prices were spiking, we really weren't paying that much monthly basis. Now we're paying a lot more because interest rates have gone up. And unfortunately, prices have not gone down and adjusted. Now, unfortunately for people buying, fortunately for people that currently own or are looking to sell, of course, they don't want to see their prices go down. I think it's really important to also think about what has happened to the average house. So in 1970s, 1980s, and even 1990s, houses were much smaller. Now they began to grow, but if I look at my 1950s, 60s, and 70s rentals that I own, though, and apartment units, all that, they were much smaller houses. I had 8-foot ceilings. I had, 1960s house. I had 1,200 square feet for my house. I had very simple roof lines. I didn't have significant windows. I had just normal, regular size windows. I had maybe a 2-stall garage, one or a 2-stall garage. No oversized garages. The garages weren't attached to the house a lot of times. I just didn't have the bells and whistles too. I didn't have granite countertops, marble countertops, quartz. I didn't have tile and hardwood floors. I didn't have 9 or 10 foot ceilings. I didn't have beautiful finished basements or even non-finished basements. I didn't have heated floors. A lot of these luxury items that are in houses that would have been considered extreme luxury back in 1960 and 70 and 80, those are just now expected today. So my average house square footage has nearly tripled from 1960 to today. So when you look at that, you have to consider, well, the house prices should go up in comparison to that. So if I really look at inflation adjusted, I say 1970 inflation adjusted, that was $200,000. That should say that if we've almost tripled our house prices, we should be almost at $600,000. So if you just look at the square footage difference, that's telling the big story. Now, again, take into consideration the finishes, take into consideration the size of the garage, the ceiling height, all of that kind of stuff. The building regulations, by the way, are much more strict and rigid and expensive than they were in 1970. The permitting process, all of that kind of stuff, the development process, all of that is much more expensive than it was back in 1970. And even talking inflation adjusted, it's just much greater. Okay. So that's another figure that I think is really important. And I think the most important thing that people forget about when they talk about the prices of houses and how much they've inflated. They're not comparing apples to apples. Our typical house is no longer the same size as it was in 1960, 1970. It's much, much bigger. Um, and then the down payment. Those are the two big things. The other thing is we have to look at the median income, and the median household income has gone from $8,700 annually in 1970 to $82,866 today in 2025. So that has also drastically increased now, albeit at a maybe a slightly smaller percentage than housing, but that has increased pretty dramatically as well. And one of the big differences in the household income is now we have a lot of times two people in the household working. And you say, well, we shouldn't get punished for that, but that's just how it is because people spend more money the more they make. And so that's what's happening is people are willing to spend more money on housing because there are two people in the house that are making that income. And you do have to have two people in the house a lot of times, especially when you're younger, to make it in today's society because that is the norm. It was designed, in my opinion, to have women work in the workforce and have two people in a household working. That was designed to continue to grow an economy and to create Americans as bigger and bigger spenders. And it worked really well because that's exactly what happens. You would think if we were smart and we did it right, when we all of a sudden had one, just the man in the house working, and all of a sudden the female, the wife starts to work, you would think, hey, her salary is going to go all to savings and to investments, and we're still going to live off just a single salary. That would be the smart way to do it. But what in reality happened is we said, oh, we're we were spending 90% of our budget now with one person working. Now we've got two people working. We're going to spend 90%, in reality probably 95% of our budget of our income. And so we've got more people working, we've got more income, we've got way more spending, and that's just how it's gone. And so that reflects, in my opinion, greatly on the median house price. And so that's created a bigger boost as well. So as we look at it, house prices have gone up. I agree, they're very unaffordable. Renting has become certainly much, much more affordable. The median rent is $13.92 today. The median ownership cost monthly, and this one's a little bit more difficult to calculate because property taxes, insurance, and all that kind of stuff. But it costs you over $3,000 to own the median house today per month. Now, we could say, well, the house is going to be bigger, it's going to have more bedrooms, so you're not comparing apples to apples, certainly. But even the median 3-bedroom apartment, this was a little harder to figure. I didn't find the exact figure, but it was estimated to be $2,000 per month. So $2,000 to live in a 3-bedroom versus $3,000 to own your own house. And that doesn't include some additional expenses that you'll likely spend on your house that's not being calculated into that figure. Now, there are other benefits, certainly, and I don't want to discount that of owning a house, and you certainly have to consider that. Your mortgage payments aren't going up, your taxes, insurance, repairs, maintenance, all that is going to go up with inflation, but your mortgage is not going to. And of course, you have a place that you can call home that you own, and I can't discount that for certain. We own a home, and I couldn't imagine going and renting an apartment at this point in time in our lives. So, anyways, just some facts, figures, some things I thought I'd throw out there for you, things that are on my mind. But housing is certainly a problem. We need to figure out how to make it more affordable, how to get people into more houses. But I don't think it's nearly as far out of reach as what a lot of people think compared to kind of what's gone on and what's transpired. Maybe you just make houses smaller and less luxurious, and that could really help solve the problem. Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.